Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 2nd of November. It's been a very tough week for markets this week. Obviously, there was the disappointment that in the US a fiscal stimulus package didn't happen, but the main reason by far has been the second wave of COVID-19 outbreaks across the globe, particularly in the US and Europe, of course. That really has made for worries around economic concerns, as we remember what happened, of course, during the first lockdown over the March, April, May sort of periods. So most of the global markets have lost somewhere between 4 and 6% over the week. That leaves the Dow Jones in the year to date down 6.6%. S&P still in positive territory, up 2.4% year to date. The Nasdaq is up 24.7%, and the FTSE 100 is down 26%. Of course, turning to next week, grabbing all the headlines will be the US election on Tuesday. Still too close to call. Main concern here is that depending on how the outcome progresses, there could be a possibility of some sort of delay to the actual decision. Once that is decided on a rather more positive note, it seems likely that that fiscal stimulus package might follow on behind after all, although it's not clear just how quickly that might be or whether indeed it might even happen in 2020. Corporate reporting in the States remains reasonably brisk. We'll have updates from the likes of PayPal, General Motors and Alibaba. In the UK, there's probably 3 companies worth looking out for. First of all, we've got full year numbers from Associated British Foods. Obviously, the headlines here will relate to Primark. When we last heard from AB Foods back in September, they'd said that Primark was doing well on the basis of pent-up demand after the lifting of restrictions. So we'll see how that's progressing, and how Primark has been affected by the fact that a lot of its flagship stores tend to be in city centres where obviously footfall has been so much lower, as opposed to retail parks, which has partly offset that fall. Shares are down around 37% in the year to date. Also looking out for half year numbers from Marks and Spencer. Now, of course, the FTSE 250 company. It'll be the usual tale of a good performance from food versus probably a poor performance in its general merchandising or clothing unit. By the same token, any update on its recent tie-up joint venture with Ocado, which launched in September, will also be welcome. Shares here down around 59% in the year to date. And finally, half year numbers also from Sainsbury. As we've said before, the pandemic has not been a slam dunk for the supermarkets. They've had to incur additional costs. Probably with Sainsbury, the main thing to look out for is how online sales have been performing, the click and collect service that they have, and indeed the performance of their convenience stores, which is more likely to have been a positive, and of course how its subsidiary Argos has also been performing. That's been one of the winners during the pandemic. That being said, Sainsbury shares remain 13% down in the year to date. Thank you for watching. Have a great week.